Why do the rich pay less federal income tax? Imagine earning $1 million a year and paying less in taxes than someone earning $50,000. It might sound unfair, but there's a reason behind it. Let's explore how the tax system works and why wealthier people often pay a smaller percentage of their income in federal taxes. Federal income tax uses a system called progressive taxation. This means the more you earn, the higher the tax rate on the income within each tax bracket. For 2025, the rates range from 10% on the first $11,925 of taxable income up to 37% on income above $550,000. Tax brackets are like steps. Only the income within each step is taxed at that rate, not all your income at the highest rate. Now, even with these rates, the perception that the rich pay less comes from how they earn and manage their money. Many wealthy individuals get a big part of their income from investments like stocks or property. These are taxed differently from wages. For example, long-term capital gains and qualified dividends are taxed at lower rates, often 0, 15, or 20%. That's lower than the highest tax rate on wages, which can be 37%. High earners also have access to many deductions and credits. Deductions are expenses that reduce the amount of income you pay taxes on. Wealthy people often deduct mortgage interest, charitable donations, or business expenses. Some deductions phase out at higher income levels, but many still lower their taxable income significantly. Credits, which directly reduce the amount of tax owed, are also more available to high-income taxpayers. Another factor is tax planning. Wealthy individuals often work with tax professionals to plan their finances. They might defer income to future years, invest in tax-advantaged accounts like retirement plans, or set up trusts. These strategies help them delay or reduce taxes legally. The type of income matters too. Wages are taxed at higher rates, but if most of their income comes from investments, their overall tax rate can be lower. This mix of income types influences their effective tax rate, which is the percentage of total income paid in taxes. Certain parts of the tax code favor investment income. For example, the lower tax rates on capital gains and dividends are designed to encourage investment and economic growth. However, these provisions mean that high earners, who often have more investment income, pay less in taxes relative to their total income. Understanding these factors helps explain why the richest pay a smaller percentage of their income in federal taxes. It's not just about the rates but also about how income is earned, what deductions and credits are used, and the legal strategies available. For everyday budget planning, knowing how different income types are taxed and how to take advantage of deductions can make a big difference in your own tax bill. So, whether you earn a little or a lot, being aware of how the tax system works can help you make smarter financial decisions. Remember, the goal is to keep more of what you earn while staying within the law. Learning about tax strategies and understanding your paycheck basics can help you plan better for the future and make the most of your income.